Hello and welcome to the first LonRes Company of 2017. This month we're pleased to welcome Tom Smith, Head of Superprime Lettings at Knight Frank. Welcome, Tom.
Thanks, Marcus.
2016 appears to have been a difficult year for the prime lettings market. LonRes data shows that while the number of properties let remained at a similar level to 2015, stock levels rose. Prime central London saw a rise of 11%, and some markets on the fringe of prime London, where new developments are completing, saw increases of up to 40%. These increases in stock have made potential tenants more confident in negotiating on asking rents, which in turn has impacted on achieved rents in recent months. So Tom, how do you think the prime lettings market has fared over the past few months?
I think it's fair to say, Marcus, that it's been a challenging year. I think the lettings market in 2016 will be defined by the oversupply that we've experienced. I think the uncertainty in the sales market, lack of price growth, has certainly meant that vendors have come to the rental market looking for us to sort of tide them over for 12 to 24 months. With the increased volumes, it's certainly presented opportunity. I think from an agent perspective, I know in your introduction you said that sort of transactions are fairly static. At Knight Frank, we've had quite a good year in the prime market, and our transactions are up 14%. But to come back to the question, how's it performed over the last 3 months? It may be seasonal, but certainly in November, December, we saw new instructions starting to slow down. As I said, it could be seasonal, or it could be some renewed optimism coming back in the sales market, or it could now be the new tax changes that are coming into play for 2017, where landlords can no longer take tax relief on mortgage interest payments. So we're going to have to watch that closely.
And the superprime market, has that performed differently?
Yeah, it has. The superprime market has performed remarkably better than the prime market. I think there are some similarities in transactions. Transactions are up 16% at Knight Frank as opposed to 14%. And I think there's a similarity in the sense that a lot of the properties that we're letting in the superprime, be it on or off market, are coming over from the sales market. But other than that, the contrast to the prime is with pricing. We certainly haven't experienced any sort of softening in pricing in the superprime sector. In fact, actually pricing, if anything, has held very firm. And we would link that back to scarcity of supply. So again, in contrast to the prime, where there's an oversupply, there really is sort of a challenge finding the right sort of superprime product. So I think from those two perspectives, we're saying that the superprime market has performed better than the prime.
In terms of the superprime market, have the types of tenants changed?
No, I don't think the type of tenant has changed. Obviously, the constant is that they're ultra high net worth, they're incredibly wealthy. I think we've seen more diversity in terms of nationality. I think if we wind the clock back to when we first started this department, we recognised that a slowdown in sales activity would result in an upturn in terms of superprime rental activity. And I think when we first started the department, we saw, as a trend, Russian tenants dominating the landscape. It's certainly more diversified than that now. But in terms of tenant profile, it's much less transient. The typical tenant profile when we first started was somebody looking for a stopgap, somebody that had bought a property, was developing it, going through planning, and looking to rent for 12 months. Somebody that had bought off plan was waiting for completion, and again would rent for 12 months. At the moment, our average superprime tenancy length is 24 months, with options to extend. And I think people are now choosing to rent as a choice. I think the biggest backdrop to the increase in activity this year has been stamp duty, transactional costs associated with buying. If you think that stamp duty now on second homes is 15%, that's the equivalent of 4 to 5 years worth of rent. So with so much uncertainty, with little price growth, I think people are now looking to rent as a lifestyle choice. And I think there's less anxiety that the sales market is running away from them. Hence why I think our average tenancy has really increased.
And I know it's tricky, but looking ahead, what do you think is going to happen to the prime and superprime market for the rest of 2017?
Well, I think we've already identified a few challenges. I think the resurgence of the sales market, if it comes back. I think we've said also that tax changes affecting landlords for 2017 may take effect. and may put a strain on supply. But I think my observation is largely that 2017 will be a continuation of 2016. I think if anything, we've learnt that the buyers in the market don't like uncertainty. And I think if we look ahead to 2017, there's still too much uncertainty on the horizon, and I think that will play into lettings' hands. I hope from that perspective we have a equally strong 2017.
Fantastic. Thank you, Tom.
No, thank you.
Are you heading back into town now, or?
Back to the office. Yeah, back to the office, I'm afraid, Marcus. Still got it. Who's this?
Oh, it's William again. Join us again soon for the next instalment of LonRes & Company. Thank you for watching.